Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. It's the 21st of May, Thursday. We've just had Nvidia earnings, which is why we're a little bit late this morning. But look, stocks were soaring prior to that anyway. We had, we had the S&P up 1.1, the Nasdaq up 1.6, the Dow up 1.3. 8 of the 11 sectors rose. The semiconductors index was up 4.5%, leading into the Nvidia earnings, which were after the bell. As you can sort of see here on the bottom left there, you got Micron up 5, AMD up 8, Intel up 7. So that that chips and semiconductors sector of the market doing very, very well again. And in the middle there, you can kind of see the likes of Lam Research, which are still they're in your manufacturing, but they're chip manufacturers. So that's sort of next to Tesla there on the market map. Obviously, oil prices got really, really hit because Trump said the US was in the final stages of negotiation with Iran. I don't know why the market keeps falling for this, because like Trump's making the boy who cried wolf look like a truth teller at the moment. This is like the 25th time we're in the final stages. But look, the market obviously, the market believes what it wants to believe, and up we went. So and look, Iran's one of Iran's sort of head people was they said that they've explored every avenue to avert war. All paths remain open still, and but they have said they're reviewing the latest draft, of the 14-point proposal. And we are seeing traffic pick up a little bit, but like when I say a little bit, I mean like a little bit. It's not, people getting excited because 3 tankers got through. In the scheme of things, when we used to get 130 tankers go through a day, is not cause for for celebration. And I believe that we're still going to see some some fallout from this in the inflation numbers, particularly based on where those PPI numbers were this month in the US, which will start to filter through to CPI over the course of the next couple of months, and how much it's already dented consumer spending behaviour with the worst number in consumer sentiment. I believe around about a week ago, since they started recording those numbers in 1952. So as you can see, Aussie market's still really dour. We've got a lot going on here. We've obviously got bond yields going through the absolute roof globally, but particularly here, the RBA is worried about inflation, and we're worried about rate hikes, and we're worried about being taxed more, and et cetera, et cetera, et cetera. So the Aussie market's not a fun place to be at the moment. Not that it's necessarily, it's not like we're the most inherently bullish. The US investors will find a reason to buy, whereas Aussie investors, from a sentiment basis, particularly lately, and particularly in the last 18 months, will find any reason to sell. As you can see there, the technicals on the hourly, daily, and weekly, the Aussie market being the most dour, and the most negatively sentiment-driven market in the world, basically. You've got, Hang Seng's the only one that's anywhere near it. And, you've got America still, being very patriotic. But, I mean, there's the cultural differences there. Obviously, we got, silver's been pretty battered, and as has gold in the last week. I mean, they did have that insane run. But we've had things like platinum pull back as well, lithium, uranium. That's not generally very good. I think the commodities are starting to listen, or starting to take note of the bond yields. And the only one that's not taking paying any attention to the bond yields globally is US tech, essentially, and the US semiconductors. So yeah, overall, it really does feel like it's the odd one out in terms of what takeaway from that, what you will, whether you're such a believer in the hyperscalers and the AI data center build out and everything that one sector is going to turn everything else around, or whether 6 markets that are highly correlated to the macro picture. The equity market is probably being potentially a little bit overly optimistic, I suppose. So in terms of Nvidia, this is a pretty, it got hit straight after, and then it rebounded, and then it sort of settled back around kind of normal. It wasn't. I wouldn't call it a massive move. In the long-term scheme of things, I think it's. I think after hours is down 1.3, so it's basically just given back what it gained over the course of the day session. We haven't, we've got it. Basically, Q1 revenue was 81 billion, or 81.6 billion. The estimate was 78.8 billion, so beat there by about 10, by about 3 odd billion. Data center revenue 75.2, which was better than the 72.8. The guidance for Q2 was 91 billion, 6 billion more. But then it was towards the higher end of the consensus range. They announced an $80 billion share buyback, raised their dividend to 25 cents from 1 cent. And, supply rose from 119 billion from 95 billion. And they're, stockpiling, against the memory crunch. So look, most of the stuff's really priced in at this point. This is their revenue breakdown. You can see, it's still exponentially going pretty well. This is but the other business is growing, albeit being, an entirely small segment of the business now. But look, one thing that gents, that one of the, I think it was on the earnings call that 46.6% of their revenue is hyperscaler. They don't go into details of who the hyperscalers are. They do define the hyperscalers, and that's your Microsoft, AWS, Apple, Oracle, Meta, Google, and the like. But Nvidia defines, they're big public clouds, the world's largest consumer internet companies. So, their edge computing, PC gaming, robotics, and auto is 6.4, which is that small part of the revenue of the other business. The AI clouds and enterprise is growing, pretty largely as well. But that's what we were talking about in our podcast last week for Bulls versus Bears is the this circular financing and vendor financing, etc. So that when you've got say 6 or 7 companies that are largely nearly half of your revenue. If they start scaling back spending, the trickle-on effect is massive immediately. It's not, it's highly concentrated. So not only is the stock market index highly concentrated, but the spend out and the GDP growth in the US, et cetera, is all is all very concentrated in one particular area. So from an economics and macro standpoint, will this save the market? Maybe. Is it a risk? Definitely. So that pretty much wraps up earnings season from now. I've got to say, and we do have a couple bits and pieces. We'll have John Deere tonight, but now it really has become like US earnings season goes on forever. Essentially, it's like quarterly, and by the time everyone gets through it, you're almost reloading for the next one. But the major companies now are all out of the way, and we will, we're largely now back. And what tends to happen is we tend to, defy gravity and tread water, or whatever analogy you want to give it. But we don't tend to go down over earnings. There's a lot of, for those of you who watch the podcast on a regular basis, this whole number around 27% earnings growth. A lot of it is on that Anthropic and SpaceX investments, etc. These unlisted investments being valued higher. Realistically, we're around about that 12%, which is still a very good earnings season. Don't get me wrong. However, you've got a lot of very bullish brokers at the moment, throwing out these numbers like the best since 2020, coming out of COVID in terms of earnings growth, etc. But in the scheme of things, it's not, you've got to dig a little bit deeper into where those numbers come from. We did have massive news as well. SpaceX filed for their NASDAQ IPO. So their ticker is going to be SPCX. They've had 18 billion in revenue in 2025. They've got plans for orbital compute, i.e. data centers in space, asteroid mining, financial services, Cursor acquisition, and then OpenAI is preparing an IPO filing in the coming weeks. So SpaceX now is within, it could be anywhere from, I wouldn't imagine the low side is going to be. But like, it could be 2 to 4 weeks we have an IPO potentially, and once they've got that, once they've filed and they've got that ticker, so that's going to change things up. It's another AI investment, whether it's going to maybe pull some money out of the hyperscalers, and because it is going to be supposedly around that $1 trillion mark. I mean, the money's got to come from somewhere. And we also had news from Anthropic as well. They're just in this month alone, their revenue has grown by more than double. So they've gone from last month being at 4 billion to now 10 billion a month in revenue. So maybe some of those earnings or those valuation upgrades are obviously justified, but like if I've seen very few things like it with this revenue growth in Anthropic at the moment. They've gone from looking at 10 billion in a year annual run rate was the prediction by the company late last year, to now they're beating that annual run rate growth in a month. So yeah, we've got we are starting to see a little bit of recovery in that software sector. Things like cybersecurity has started to go head a lot higher. We're starting to see recovery in the medical sector and software as well, just due to that medical report out of one of the universities in the States saying GPT's answers or general AI answers are over 50% inappropriate or wrong, and for women probably more like 60% plus. So I think you're going to start to see the doubt, the cybersecurity part, doubt started to really come through with that new model Mythos, which Anthropic is basically not allowed to release, or I mean they weren't going to release it anyway. But I think you'll start to see the same thing happen in this medical industry. I mean the medical industry's got some pretty good gated AI. And a high moat, and we speak to doctors where they actually use this stuff, particularly in analysing X-rays and radiology and imaging and etc. But it's all very much closed systems, and high HIPAA compliance is the big thing, which is the standard you've got to meet basically to hold confidential patient data. So those barriers can't just be beaten by some kid in a garage like knocking up some like, oh look, I can do it. Like essentially those moats are going to stand. I mean, some like the amount of money it takes to even get FDA or HIPAA compliance approvals, and then forget the fact you need a business model, marketing team, etc. The death of software is wildly exaggerated. But like I said, we did a webinar on this about a month and a bit ago. You can go to and subscribe at MPC Markets on YouTube, and you can get access to all those webinars, or go to our website and grab it from there. In terms of the Aussie today, we've really got we've headed a little bit higher overall. And I don't really expect too much out of today. For those of you who watch Ausbiz, we've got the global edition of Ausbiz of the call today, myself and Mark Morland on. We're going to cover Nvidia, a stock of the day, and a bunch of actually pretty random companies, I've got to say, from all over the globe. So make sure you tune in there. Go to ausbiz.com.au and get it on your streaming services. But thanks for joining us today, guys, and we will speak again tomorrow.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.